And so we have one question here. It says, what's a good starting point with a rental real estate? Is it 30,000 and up? What would you have to say versus buying a REIT, a real estate investment trust, versus going out and getting a real estate rental property?
Well, the first thing you always ask people, you got to be ready. If there's a term we use called the 3 T's. And what you got to be ready for, if you're going to invest in a rental house, you have to really be ready to take over the responsibility of these 3 T's. And that is you're going to have to be dealing with the toilets, the trash, and the taxes. And remember the 3 T's. So, $30,000, you could invest in a rental house that would produce rental income of $3,000 to $4,000 per year, using a 10% multiple. Or you could invest that $30,000, and if you do that, you're going to have to be dealing with those 3 T's: the toilets, the trash, and taxes. So in other words, maintenance and taxes and insurance, those are all part of those responsibilities that you have as being a landlord. Alternatively, you could go invest that money into a publicly traded REIT, and I would advise investing more than one to properly diversify your portfolio. But you could take that $30,000, invest it into the stock market, essentially, which means it's highly liquid. You can get your money out at any time. If you invest in that rental house, you're not going to be able to get the money out. Once you put it in, it's in, and until you sell it, it's going to be sitting there. There's not as much liquidity. So again, you could take that $30,000 of capital, put it into, say, 4 or 5 different REITs that are going to produce pretty attractive dividend income. In this environment, very attractive, because REITs have sold off substantially given this coronavirus, that the dividend yields are much, much higher today. So on average, let's just say you're getting 5 to 6% of dividend income, but you don't have to deal with those 3 T's. So you really have to decide, do you have the time to invest in, to be an investor and be an active investor, or would you prefer to be a shareholder in a company? And in addition to the liquidity argument that I mentioned earlier, you also have a transparency element, because when you invest in a public company, you have SEC guidance that basically insists that these companies have to provide their investors with complete transparency. So liquidity, transparency, and also management. You have a company that is managing these properties. You don't have to manage them. So it is a trade-off. And again, it depends on every investor's risk profile. I've owned a lot of rental houses and a lot of private property. I was a developer, owned shopping centers and a number of industrial properties in the past. And if you're in that business and understand that business and you want to deal with the 3 T's, that's fine. But again, the other alternative is publicly traded real estate investment trusts, which are much more attractive. I did want to say one other thing, going back to Warren Buffett. Warren Buffett has invested in several different REITs, publicly traded real estate companies, or actually, I should say Berkshire Hathaway has invested in a couple of companies. They are currently an investor in a company called Store Capital. Their ticker symbol is STOR, which basically is a really good buy at this point, given the pullback we've seen lately. And then he's also an investor, or the company is an investor in a company called Seritage, which is a spinoff of the Sears portfolio real estate. So they own a lot of mall properties around the world.
Okay. Now, with that, if I had $30,000 and I went out and got a personal rental property versus I got a REIT, which one would probably draw me the most, once everything's said and done? I know you've done both. You've done the REIT side of the house and you had your own rental properties. You say you don't want to deal with the 3 T's, but which one would probably get me, create that income that I'm looking for, or more in most cases?
Yeah, so it's interesting. In terms of performance, I mean, believe it or not, real estate investment trusts have actually outperformed the private sector over long periods of time. Now, not every year. Some year, the private market will outperform the public market. But I do have historical evidence to validate the fact that publicly traded REITs do outperform private real estate. Now, the one thing that Donald Trump used to always say when he was a developer is you make money when you buy. And you could say the same thing in the stock market. It's all about that margin of safety that Warren Buffett's mentor, Benjamin Graham, spoke highly about in his book, The Intelligent Investor, is to invest with a margin of safety. And that is the buffer that you select, whether it's a security or piece of real estate, you want to buy it as low as possible. That would provide you with the most potential profit going forward. So you really have to be a good investor and understand, what you're buying, and make sure that you're purchasing that property at a really good price. I mean, so if I was buying a $30,000 piece of property today, a rental property, I would definitely make sure that I'm getting a very good deal and that I will be able to make some profit going forward. So every property or every deal has to really, be evaluated on its own merits. And so it's hard to say. I honestly think that even though I'm very bullish in the REIT space, I think it makes sense for investors to diversify and have that both the elements of rental property and public stocks. I think it's important to have both because you need that diversity. There are going to be markets where we saw in 2009 where there was very little liquidity in the public space, and that's when some of the private real estate performed better. But I will say again, with my 30 years of experience going back, I mean, I think for most investors, owning shares in REITs makes a lot more sense than owning private real estate for those reasons. And again, having that liquidity really is important. I mean, I've got 5 kids, and fortunately 2 of them are out of the house now. But there's always things that come up. You need braces. You need. I'm putting my son's basketball goal together today, by the way. Anyway, I used to play basketball, Prince, back in the day.
Okay,
but
got a little skills there, Brad.
Well, I would say that. I mean, I definitely, I'll send you some pictures. I don't know if I can jump as high as I used to, though. I might can touch the net now. Okay. But anyway. So, but I mean, again, it really boils down to the investor's profile. And for younger investors, I really think, owning REITs makes a lot more sense. And you can really invest in any sector today. And it really is a great business. I mean, it's a $2 trillion industry. So think of it like that. That's how much liquidity is in the market.
Okay. So J-Bone is there from Alabama.